Hey everyone, welcome to StockFX. In this video, I will reveal to you 5 dividend stocks to beat inflation and earn growing dividends in 2022. Are you wondering what to invest in with the current inflation? Do you want to know which stocks perform best during inflation? Which companies offer the highest dividends currently? If your answers are yes, then you are in the right place. I completely understand your concerns about where to put your hard-earned money for guaranteed returns. You don't want to lose your money. And you may have tried searching online for stocks to invest in, but could not find the right one. I know, because I have been there before. Well, with that in mind, I had to make this video for you, and I hope you can take advantage of this information. I'm going to show you the best dividend stocks to buy in and beat inflation and also earn growing dividends in 2022, all of which will yield high interest rates. Stay tuned until the end of this video so that you don't miss out on what these stocks hold. You won't believe how much McDonald's is paying out as dividends. Make sure to subscribe to our channel so we can help you know more about investing in stock markets and other areas of investment. And please take note, I am not a financial advisor, and every information you get here are results of my personal research with so many years of experience in the stocks market. My goal is to build a family here and positively impact as many lives as possible. Financial freedom is our motto here. Okay guys, let's get started. If you've watched our previous video, you will know what a dividend stock is. Dividend stocks are those that make monthly cash payouts to their shareholders. Dividend stocks can be good sources of income, but the finest dividend stocks could also be good methods to build wealth over time. However, not all dividend stocks are good investments, and many investors don't know where to start looking. This summer, the stock market has deteriorated from bad to worse, with June beginning with a series of steep falls. Many investors are fleeing the market as the Federal Reserve takes tough action to try to rein in the runaway inflation rate. However, for patient investors, these large market drops can provide good longer-term entry chances and outperform inflation. With the market in freefall, it pays to be more selective. Strong dividend-paying companies might be excellent selections since they generate consistent income. That's a great respite during these hard times in the economy. Let's have a look at the 5 of the best dividend stocks to invest in if you want to beat inflation while also earning growing dividends in 2022. Brookfield Infrastructure Corp. Brookfield Infrastructure Corporation, and its subsidiaries, owns and controls regulated natural gas transmission systems in Brazil. The company also engages in the regulated gas and electricity distribution operations in the United Kingdom, and electricity transmission and distribution, as well as gas distribution in Australia. It operates approximately 2,000 kilometers of natural gas transportation pipelines in the states of Rio de Janeiro, São Paulo, and Minas Gerais, 3.9 million gas and electricity connections, and 61,000 kilometers of operational electricity transmission and distribution lines in Australia. The company was incorporated in 2019 and is headquartered in New York, New York. Brookfield Infrastructure Corporation is a subsidiary of Brookfield Infrastructure Partners LP. Brookfield Infrastructure is a cash cow with a dividend yield of around 3% at current prices, with an objective of increasing the distribution by 5% to 9% per year. And if you don't know how to check the dividend yield of the company, please check the description box below. I will attach the link to the previous video for you guys, and don't forget to smash the like button and drop your comments in the comment section if you are getting value from this video. The next one on our list is Walgreens Boots Alliance. Walgreens, one of the world's largest retail pharmacy operators, is witnessing a significant turnaround. Its initiatives are already decreasing expenses, increasing digital sales, and, perhaps most critically, introducing full-service healthcare clinics to hundreds of its retail sites. Becoming a more integrated healthcare company is assisting this lucrative company in becoming even more profitable, pushing its already generous dividend to even greater levels. With a dividend yield well above 4.5% as of this writing and 6 decades of yearly payout increases, Walgreens stock has a lot to offer dividend investors. Keep watching, you won't believe the high interest rates that the next 2 stocks are paying out to its investors. Home Depot payouts will make your eyes pop out in disbelief. McDonald's. McDonald's is a fast food restaurant multinational with a proven track record of rewarding investors. Since it began paying dividends in 1976, the corporation has increased its distribution each year. McDonald's possesses several of the qualities that investors want in a top-income investment, including a global competitive advantage over competitors, a stable recurring revenue model, and a strong track record of paying its shareholders. After battling the pandemic and seeing its restaurant business suffer as a result of lockdowns, the company quickly regained its sales pace. The company posted better-than-expected earnings and revenue in April, owing to pricing increases in the United States and robust overseas sales growth. MCD pays a quarterly dividend of $1.38 per share. That translates to an annual dividend yield of 2.26% at the current stock price. With a manageable payout ratio of about 70%, the company is in a solid position to continue delivering dividend growth. Home Depot. Home Depot is one of those retailers you can rely on to provide consistent dividend payments. The home improvement giant, in recent years, invested heavily to prepare itself for the e-commerce onslaught and changing consumer behavior. Home Depot recently boosted its annual earnings outlook after a jump in first-quarter same-store sales showed that demand for home improvement supplies is persisting, even as mortgage rates rise. When considering buying a stock, consider the future prospects, especially if you are an investor looking for portfolio growth. Although value investors would argue that the inherent value compared to the price is the most important factor, a more attractive investment thesis would be great growth potential at a low price. The future for Home Depot is bright, with profit likely to expand by a double-digit 10% over the next couple of years. Better cash flow appears to be in the stock's future, which should lead to a higher share valuation. The Atlanta-based company is also a consistent dividend payer. Its quarterly dividend has grown by 22% every year on average over the last 5 years. With an annual dividend yield of around 2.6%, the corporation pays $1.90 per quarter. And, with a good payout ratio of 50%, there is plenty of possibility for expansion. Before we continue, be sure to hit that like button, subscribe to our channel and turn on your notifications to stay updated with the world of investing. Bank of Nova Scotia. The Bank of Nova Scotia, Canada's third-largest lender, now has one of the highest yields among the top 6 banks in the country. It has the potential to be a terrific addition to any long-term income investment. The Toronto-based financial organization has the most diverse portfolio of any Canadian bank, with a sizable portion of its revenue coming from activities in Central America and the Caribbean. Brian Porter, the company's CEO, has spent much of his 8-year tenure overhauling the foreign division, selling off minor or underperforming companies and doubling down on larger, more promising areas. The bank recently stated that its Canadian banking profitability increased by 27% year-on-year, owing to solid housing and commercial loan growth, fewer credit loss reserves, and higher fee revenue. The lender also has a strong dividend track record. Earnings growth has resulted in dividend increases in 43 of the last 45 years, making it one of the most consistent dividend growth records among big Canadian firms. Dividends have been paid by the bank since 1833. There are many reasons why you should consider investing in dividend stocks, but you must first understand the market and the underlying risks. These stocks might help diversify your portfolio. So, there you have it. Great people. Do you agree with what we have discussed here? What did we miss? Please let us know in our comments section. If you found this video helpful, please press the like button and subscribe to StockFX for more content like this. Thank you guys. Show some love, drop your comments, and share this video. Let's get this channel popping. One love.